Well, we don't normally do these calls on Wednesday, but it's Fed Day. So obviously we got to weigh in and talk about what the Fed did. So we're going to dive right into it. I hope everyone is doing well. Today is Wednesday, the 18th of September, and very anticipated Fed meeting today. The Fed, for the first time in, I think, just over 4 years, has given us a bit of a break in the overnight lending rate between banks. We are now down a half a point. And that over the last week or so pretty much became the consensus of where the Fed was going to go. So as we have said, y'all, going into this meeting for this video over the last month, the Fed really could only meet expectations or disappoint the market at this point, because we've seen really nice improvement in rates over the last month and a half or so. We are down significantly in rate. Unfortunately, I can't give you national averages today because Mortgage News Daily has crashed after the Fed results, as everyone has flocked to that website to see what the Fed has done. So hopefully I'll have some more updated numbers. I may give another shot at that tomorrow. So you might get back-to-back videos from me if something drastic changes. As we said going into this meeting, we encouraged folks strongly to not float their interest rate going into this meeting, to go ahead and lock ahead of it, because we had already seen the improvement that the Fed was likely to give us in current pricing. That has proved to be true, y'all. I'm looking at MBS Highway, which is a great website. It's a paid service. It's not cheap, but a lot of folks that are insiders in the industry have it and pay for it. I'm one of those. They offer some great tools. They have mortgage bonds. The 5.5% 30-year fixed rate mortgage bond is down 14 basis points. So that's pretty much good enough for an eighth of a point or so increase if we were to reprice right now. So we might see rates higher by the end of the day. Certainly if we closed right now and reopened in the morning at the same pricing, we would be a bit higher. We were a bit higher today from yesterday. We were about an eighth of a point across the board higher today than we were yesterday. Probably going to be that again tomorrow after the Fed has given us the half point as expected. So that's enough on the Fed. More to follow on that when we've got some specifics. But I'm getting a lot of questions from folks, y'all, about refinancing their house. And I want to clear up some misconceptions or common conceptions around refinancing with some numbers. So I hope y'all can follow me. This is always a little bit challenging to do on a video. But I want to take a typical example of a house that you bought a year ago, had a $400,000 mortgage at 7%. A lot of folks are in that category, y'all. 7% was kind of a common theme a year ago. So there's a lot of folks that are holding that paper today. And they're saying, well, hey, if I'm only going to improve that to 6% today, is it really worth refinancing it? Well, let's dive in and take a look at that very question. Let's assume for a moment that we're going to refinance all of our closing costs, that we're going to let's just take a typical 3% cost of refi. So we're going to compare a $400,000 mortgage at 7 with a $412,000 mortgage at 6. The vast majority of folks that refinance their house don't bring anything to closing, y'all. In fact, they miss a payment because that's the way that interest is charged in arrears. There's kind of no way to miss a payment when you refinance your house. So you save that one off-cycle payment, and generally folks refinance all of their closing costs into the new loan. So let's just call that 12 grand on a $400,000 mortgage. Your mileage may vary. That would yield a monthly savings of $191 a month, y'all. And if we're comparing a 30-year to a 30-year, that saves $81-ish thousand over a 30-year loan. And you can take that $191 savings and put it in your pocket and be glad that you've got that $80,782 in interest savings over 30 years. Or if you are satisfied with the payment you're currently making, if you're kind of on the fence saying, you know what, I'm good with where I'm at, I don't necessarily want to throw 12 grand in closing costs onto this deal, so I'm going to stay put. Well, if you were to keep making that same payment that you were making at 7%, in other words, you've now refinanced, but you're adding $191 a month of additional principal reduction to that newly refinanced mortgage. Well, now you're going to save over the life of that loan $167,656 in interest, and you're going to pay it off in 24 years and 9 months. In other words, you're going to pay it off 63 months early. So the question then becomes, if I keep making the same payment I'm making right now and I refinance my house, what does it do for me? It saves you $168,000 and it pays your house off 63 months early. Another way of saying that, y'all, are when you look at those numbers, you put an amortization schedule side by side between the original mortgage at 7 and the new mortgage at 6, you have recouped those closing costs and you are buying down your loan balance every month after the 43rd month of that new loan. So the question then is, are you going to live in it 3.5 years after you refinance it? So if the answer is, I'm good with my current payment and I'm going to be living in this house 3.5 years from now, then yeah, it makes a lot of sense for you to drop a 7% mortgage down to 6% and to do it sooner rather than later. The sooner you do it, the faster you can start saving some money. So in any event, I wanted to run through that. A lot of folks are not aware of the magic of amortization. It's very much like a snowball rolling down a mountain. It starts off really small, but as it gets bigger, it starts geometrically expanding. You know, it can double in size in just that last few feet down the mountain, and interest is very much that way on an amortized loan. Just a few grains of just a little bit of snow at the beginning can build a huge amount of steam towards the end, and that's why you can see those big numbers saved with just $190, $200 monthly savings, especially if you apply it back to the loan. In any event, I hope this helps clear up some of that mystery. I love running these numbers for folks. We have all the tools to do that in a really informative way. If you have any questions for me about specific scenarios, all my contact info is on the screen. Good news that the Fed is finally on board, but frankly, we're not going to see much more movement from where we are now until they move more in the future. So more to talk about as that starts to transpire. Be blessed, stay safe. We will talk to you soon.